Hello, this is Erin Swenlin with DecisionPoint.com, and I am here to bring you your daily five, the five charts that I'm going to be watching very closely this week. So let's get to it without any further ado. Before I do talk about my charts, though, I want to remind everybody that you can join us live. Carl is in the room now for the Decision Point Trading Room on Mondays at noon Eastern. Just go to our website. On the homepage, you should see a graphic that you can click on, and then you can join us live in the trading room. After that, at 3 p.m. Eastern, it does air on YouTube and StockCharts TV, so don't miss it. All right, I'm going to start with the all-important SPY. So let's look at the daily one-year chart. Obviously, this is one we all look at all week long, but I wanted to give you our perspective on what is going on currently. I am recording this on Monday morning, so who knows how it's going to finish, but here we go. So currently, we did see a breakout from a declining trend channel. I know there are a lot of very bullish people out there. We are bullish, but cautiously so, as we do believe we are still in a bear market. We certainly would like to be surprised and would like to be wrong about that this is the market bottom. But really, with all of the things going on globally and economically, we really don't see any changes there. So more than likely, the downside pressure will continue on the market. But currently, the breakout looks good, and we are holding above that 50-day EMA. Barely, but we are. So we are looking for a move back up here to 415. And some of the reasoning, well, we have an RSI that is positive. Our PMO is on a buy signal that was that occurred in oversold territory. It is still rising. In fact, it did accelerate somewhat with a bottom above its signal line, which is especially bullish. The only thing I'm a little concerned about here is the VIX. We do have a puncture of that upper band that occurred on Friday, and now we're seeing the VIX moving down on our inverted scale. Overbought should be on the top and oversold on the bottom, so that is why we invert our VIX. But as you can see, that upper band was punctured, and now we're starting to see the VIX readings getting higher, but on our inverted scale, moving lower. The only thing that, and the reason we're concerned is typically when we get these punctures, it usually will lead to some downside movement. And, so that is a concern, but the Bollinger Bands have been squeezed quite a bit. So it's pretty easy for the VIX to puncture that upper band and the lower band for that matter. So we are seeing the VIX above that moving average, and that does indicate there is internal strength still there in the market. Additionally, the stochastics are telling me that we also have a nice bias here in the market with them over 80, and at this point did have a negative crossover, but that's okay. We're still above 80, and that's what we'd like to see. Let's look at the Swenlin trading oscillators. These are our short-term indicators. And, they really got overbought last week. And on Friday, they did turn down, which is something that does usually concern us. And we are somewhat concerned, but currently with this level of support holding here on the SPY, we're still feeling okay about it, even though our Swenlin trading oscillators have turned down. The reason we feel okay about it is our participation indicators are still looking healthy. We have over 3/4 of the SPY with price above their 20-day EMA. It's kind of flattened out. It hasn't really gotten that overbought. And similarly, we have 85% of those in the SPY with rising PMOs, rising momentum. That is something that can continue to carry prices higher. When we look at the intermediate term indicators, it does give us some hope that maybe this is the end for a little while anyway for the SPY's decline. You can see that we finally got our ITBM and ITVM in positive territory on Friday. These are now neutral to honestly overbought readings at this point. You can see that back here, we didn't even hit positive territory. And here we were just in positive territory before they turned back down. So we will be watching these very carefully. They did call this top up here when they turned down. And we also saw them confirm a move to the upside here when we got that breakout from the trading channel that we were in there for the SPY. But let's go ahead and look at some of our favorites here. Let's look at gold. I know everybody always asks what Decision Point thinks about gold. We follow it very closely. This is the dollar gold chart from Friday. I do happen to know GLD is down somewhat, so that could be a problem. But at this point, we are seeing that nice little breakout, a tiny breakout, and we want to see price hang out above that area of prior overhead resistance. We think it's going to do good. And the reason we think so, do well, we're going to see the RSI is rising out of negative territory. Notice the PMO for gold is starting to turn back up in oversold territory. And stochastics, are rising at this point, picking up a little bit of acceleration. We do see that discounts for the physical gold trust are still very high. That means that sentiment is still very bearish on gold. And we want to see it actually get very bearish, because typically when it gets very bearish in the short term, it will lead to some rallies. So we are seeing readings that the discounts are high enough, I think, to consider those as a sentiment gauge where we might see a reversal based just on sentiment being very bearish. But, we'll have to see if we get a continuation here. Gold has been really slow to move here. It's obviously had a really difficult decline out of that March top, but we are looking for it to begin rebounding at these lows, which could offer us a pretty nice opportunity here for gold. And finally, I'm going to finish off with the U.S. Oil Fund, USO. We're often asked in the trading room about energy and oil, so I figured I would cover this one as well. So as you can see, oil has been struggling here, obviously. We've had these reverse islands popping up here. This was considered one, a reverse island to the upside. And now we kind of have an island here off of this decline, which does suggest we should get an upside breakout here. And really, when I look at this chart, I also see a reverse head and shoulders that is building here. We have the left shoulder right over here. There's the head, and here is the left shoulder that is now starting to come together with today's move to the upside. Currently, a lot of the oil stocks, oil-related stocks, are doing quite well this morning. So we'll see if that continues out. At this point, the RSI is still negative, which does give us pause in that relative strength is not quite there as far as the RSI goes. PMO had started up, but now it's flattening again. But it hasn't really turned down either. So at this point, like I said, this looks like a pretty nice bottoming formation. Stochastics are now up in positive territory. So really, we're feeling kind of good here about USO. But, ultimately, before I get too far into the oil-related industries and those types of stocks, I'd like to see a breakout at least above that 20-day EMA, something to give us a sign that this reverse head and shoulders is actually going to resolve as expected, which would be a breakout above this neckline drawn from these two tops. If we get the breakout there, the expectation is a move that is the size or height of the prior pattern, which would give us price pretty much right up here to test those March highs. So I think it's looking pretty good here for oil. I know for me, though, as far as investing in this area, I would really want to see that breakout first. But then I am a momentum trader, and I do like to see that PMO turned up as well. So we'll see how it goes. But crude oil looking really interesting right now. All right, that is all I have for your Daily 5. Again, my name is Erin Swenlin from DecisionPoint.com, and I welcome you to come check out our website and certainly tune in at 3 p.m. Eastern for the new Decision Point Trading Room show on StockCharts TV.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.